Good morning, people. Welcome to Success Tree IAS. Today we will start Economic Survey 2016-17. So if you like our videos, you hit like, subscribe to our channel, and you can comment in the comment section below regarding any of the questions. So here we go.
EFC was followed by the banking crisis, financial crisis, right? But it didn't happen in India, in case of India. There, when financial crisis, the lending automatically declined and everybody got cautious. But here, banks kept on lending, kept on lending. Why?
Because assuming that they will pay off with time. So,
And then
a boom
also
would
that
come.
is
Even
also
if
one more reason that opacity among the banking sector has increased. So political leverage and mileage they were through the patronage system they were lending money. One more factor.
Because they had the confidence, the government will back them, right? So lending had this. That's why they kept on lending, even though certain industries started defaulting over it. But even the creditors, debtors, everybody was confident because if something because the major portion of this lending activity was concentrated in the public sector banks. Now this PSB they already had their huge capital on one side. Secondly, major shareholder is the government, right? So this kind of the confidence led them to do this. So last economic survey that proposed certain solutions for it. So you understand why twin balance sheet problem? Balance sheet problem started from the corporate sector, and when they started defaulting on their loans, it brought the stressed assets of the banking segment as well. Now it is a spillover effect, further cyclical in nature, spiraling effect, because once the corporate started defaulting, ultimately it makes the banks also cautious after a period of time. So they also started, lending with more caution. So the credit growth declined. We had seen in the last couple of years. Once credit declined, ultimately on one side, the investment which had already been there, or the investment that was needed by the industries, that declined. And that declined ultimately there. So spiraling effect that again impacted the banking segment in this way. So last year, this year's survey proposed that instead of going for decentralized approach that has been done till now by our banking segment, decentralized in the sense of private asset reconstruction companies, instead of it there should be para, that is public assets rehabilitation agency, that will be centralized agency. So this year's survey has proposed this as a solution, so you should be able to remember it, that what para is will discuss in detail why it is beneficial or what are the prospects challenges in this. But before we start with the last year survey's proposal, he, what has been done on those regards, like, so survey last year proposed 4 hours. What were those 4 hours?
restructuring, reform,
restructuring
रिकॉग्निशन, और क्या आपका रिफॉर्म, रिकैपिटलाइजेशन एंड रिजोल्यूशन. These are 4 hours. So we just start with this. You initially read this italic lines, whatever these are. So this give you the overall understanding of the whole chapter of this twin balance sheet problem. So it start with that the issue linked with the over leveraged companies. Over leveraged during what time? During the boom period. So in the 2000, mid 2000 boom period, everybody was going good, growth rate good. So the industry they invested heavily, they over leveraged. And once the global financial crisis appeared, the growth rate projection also plummeted, ultimately leading to the investments not turning out to give returns, with the other issues like circle, for example, clearances and all, making them defaulting on the loans. So this over-leveraged companies and bad loan encumbered banks. So they had been using till now what? Decentralized approach. Like they were having their private asset reconstruction companies for the banking sector. So this year survey proposed public sector asset rehabilitation agency. Now here it discuss about the concentration of NPAs, bad loans. So discuss a major portion of the bad loans, the NPAs, lies with the public sector banks. Right? So it shows that particular figure that concentration of these bad loans, more than 4/5 of NPAs, they lie with the PSBs. So remember this data, right? How much? 4/5. What was the reason? Means why so much? Suppose the question comes, or like you have to discuss this thing somewhere. Why this much a huge concentration lies with the PSBs?
Because of the size. The size.
Yes, one good reason of the size, the huge capital base. Secondly, if you see during the growth period, where the maximum investment went in the infrastructure projects, the government was pushing for the infra projects, right? When the government want to materialize certain projects, what it will do? It will somehow incentivize or ask the PSBs to go for the lending activities, isn't it? So these were certain reasons why, because ultimately if you understand that though this uh, post LPG, our growth was mainly private sector driven, but was financed mainly by the public sector banks. So when this main growth, the major growth was financed by PSBs, so where the NPAs will come? In PSBs. And even our capital penetration was not so much, right? If you see how the developed countries at this period of time, their major finance comes from the capital market, not from the banking market. So it's a kind of the, you can say, trajectory of financing along with the growth. So it's a, as India progresses in its development path, so the share of capital market increases in the financing. So last to last year survey discussed these points that Indian trajectory is still along the very ideal line. It is going a good way as other countries they had been doing so. So our financing by banking sector is on right path as per the development phase of our country. So as time progresses, the capital penetration shall increase with uh, deeper bond market here.
So interest coverage ratio.
Yes, interest coverage ratio less than 1 means they are not able to even finance their interest as well. So we call these companies as IC1 companies.
IC1.
IC1. IC interest coverage ratio less than 1. Interest coverage ratio less than 1. IC1 companies. So these companies are those companies which are not, even the interest, paying interest is not economically viable for those companies. Are you able to understand this thing? So it says around 40% of corporate debt was owed by companies which had an interest coverage ratio of less than 1. So means they are not even to pay back their interest as well. Forget about the whole loan. So that defines the twin balance sheet problem. You understand the balance sheet problem is of the both banking sector as well as the corporate sector. We discuss about compare India's NPA ratio higher than other emerging market economies except Russia, because issues with Russia are different because a lot of restrictions on this by US and Western countries. So it says certain, so as it was seen with twin balance sheet problem with other economies, why it has happened so? Because they overexpand during the boom. The same thing it has been explained here in this paragraph that they overexpanded during the boom period, for the over expansion that needed uh, in fact, the credit from the banks, the financial sectors. So highly more investment, more debt, and when the GFC came, global financial crisis, with a lot of other issues like clearances and all. So the investment projection went down, started defaulting. So certain corporates which whose balance sheet went bad, they they put on hold their investment decisions. Secondly, the banks, when they become cautious, so even the good corporates, they were not able to invest because the credit growth got limited. So it was a generally how the countries with the TBS, twin balance sheet problem, they had followed the path. But in case of India, well, it didn't follow the exact path because in case of India, the banking sector didn't come under pressure. If you see, the banking sector came under pressure in the last 3, 4, 5 years, as it has been visible now. But just after GFCs, for example, after 2008, nobody was expecting our banks to come under pressure, huge NPAs. So regions, again, they have seen that there has not been even hint of pressure on the banking system. Why? It says the major portion of the NPA, the loans, was concentrated in the PSB, public sector banks. Now they already has a huge capital base, secondly backed by the government. So there was a confidence from the investor, the creditors, everybody that banks won't default. So they will. So they kept on lending. They kept on lending. They didn't stop there. Whereas in case of the developed countries, the US, there the GFC was it went along with the financial crisis, failure of the many financial institutions. Lehman Brothers was one of the among few. So this chapter will discuss basically 4 questions that we will come to understand. What went wrong? When did it go wrong? How India managed with high growth despite TVS problem? Is this model sustainable? And what to do? So in the proposal they have proposed Public Assets Rehabilitation Agency, PARA. So first we discuss what went wrong. Now what has happened till now? It has an introduction portion, everything in the chapter that has been explained in the brief here. So again the same things will come. What went wrong? Again they discuss about mid 2000 boom period, lot of investment coming, expectation of the investors for the economy to grow. The whole world economy was growing. So and with the higher growth, India was growing. So 9 to 10% per annum, India had surged to this growth. We'll discuss para in the last. This box we'll discuss in the last. So they discussed plan. The firms they made their plans accordingly because they were expecting good returns on their investment. They started investing heavily, right? Over leveraged, but with the say, and when the investment comes, now it also investment. How the investment comes? Investment comes with a credit. So investment boom was going along with the credit boom. So both things are going hand in hand. But with the GFC, ultimately the projection went down. The whole world came into the crisis, the financial crisis. So it gives certain data there that in span of just 3 years, it just show how our credit growth went rising. In just 3 years, from 2004, 5 to 8, 9, the amount of non-food bank credit doubled. And this credit not only came from the banks but also from the inflow funding from the overseas. For example, ECB. So India had leveraged on the ECB as well during the same period of time. What is ECB? External commercial borrowing, right? So now, is it capital or on the capital account or on current account does it come? ECB. Capital account, yes. And now what kind of the ECB now we have?
Masala.
Yeah, that is only on one part, right? So that is rupee denominated ECB is the masala bonds. Other are even foreign currency denominated bonds as well that can be issued by our companies. Now once GFC came, so the projects that had grown with the assumption that will grow a lot in the coming years, they suddenly confronted with a growth rate that was half of that level. So issues started spiraling. Financing cost increased sharply. How the financing cost increased? Because on one side, the domestic interest rate started increasing as RBI started tightening its monetary policy just to counter the inflation. What generally RBI does to counter inflation? क्या करता है? What's your name?
लकीर
हाँ?
लकीर
रकबीर. बताइए. लकबीर और रकबीर?
लकीर
Okay.
तो बेसिकली आपका रेपो रेट इंक्रीज कर देता है सो एंड अनदर थिंग इज आपका जैसे
ठीक है. So what will be the consequence of this, Anchit?
Of, sir?
Of RBI countering the inflation. When RBI try to tackle the inflation, what is the consequence of this?
So the money gets squeezed out of the market. The cash
Right. So
liquidity is
Growth comes
ultimately
Growth comes.
rise in the lending rates as well. Right. So means the loans becomes costly now. So it means so the same thing here if you understand this thing that financing cost increased sharply. Why? Because in time of inflation RBI started tightening its monetary policy. So already they were under pressure high because investment was they're going bad. Secondly, the financing cost also started increasing here. Thirdly, even the firms who had borrowed from ECB by way of ECB, they had borrowed in foreign currency, and they were borrowed when $1 was 40 rupees. And if you remember around 2012-13, it reduced to around 70 rupees as well. $1. Are you able to remember this scenario? Of 2012-13, the our rupee depreciated a lot in comparison to dollar. To record low level, it reached a new fathom there. So it means that financing now they have to repay. Now they have to pay more in terms of rupees to pay back their ECB, their loans. So it shows their financing cost had increased sharply. So this line summarizes higher cost, lower revenues, and greater financing cost. All this exacerbated the problem. Then it discussed about IC1 companies. What is IC1 companies? Interest coverage ratio less than 1. Means they are not able to pay back their interest as well. So it says around 1/3 of corporate debt was owned by companies with an interest coverage ratio less than 1. And many of them in the infrastructure projects. By 2015, it reached around 40%. So the corporate debt by 2015, it was owned by the IC1 companies. So it showed what went wrong. So understand what went wrong during this period. So one of you just summarize the whole thing, what went wrong. Anchit, बताइए.
so already these industries they were under stress and owing to this problem there was this uh, the financial cost it was being lowered so it was creating a sort of shortage in the market already the
Start from the पहले से start कीजिए आप, ठीक है. प्रियदर्शनी बताइए. आप समझ में आया कुछ क्या हुआ यहाँ पे? बताइए. विभू आप एक्सप्लेन कीजिए.
Sir, in boom period, the plans were made for long term,
Right.
and money was borrowed by corporates, and it was funded by public sector banks mainly. And when the global financial crisis hit, led to half of the growth rate
Right.
in the GDP level, and slowly when the export declined, when the export declined, and it also it harmed the confidence of the investors, and also the this public sector banks, they become cautious because it was resulting into higher cost. ECB also led to that, and basically when they become extra cautious, they stop lending to even to the good corporate houses, and when the good corporate houses could not even invest, and the one which were already invested, and they were not able to pay even the interest, so it further declined growth further declined.
Right. So this is the whole scenario till now. Boom period, invested heavily. So these companies became over leveraged. Why? Because at time of GFC, the projection of the growth rate declined to even half of the number. So they put on hold their investment decisions. Investment declined because earlier time investment along with credit was increasing very sharply. So after that, other issues with clearances and all, ultimately the balance sheet of the corporate started worsening down. Along with their financing cost also increased a lot. Why it increased a lot? Due to these reasons, that RBI tackling interest rate increasing, their ECB also increasing their because they had borrowed very cheap at $1 40 rupees. Now they are paying back for 70 rupees for a dollar once they return their loans. So all these collectively cause a lot of issues to our corporate sector. Then here we come to the next segment. What explains the twin balance sheet syndrome with Indian characteristics? Why it says Indian characteristic? Because the reasons were same, right? But consequence was not same as other countries they had followed with respect to twin balance sheet. So what was the major reason why our economy didn't follow the same path? So here we'll discuss that. So initially they say that a surge of borrowing. It says India did indeed follow the standard path to TBS problem. Means the path was same, but difference was in the consequence. So what was the major reason? One of the reason was that the other countries, the developed countries, where there was issue of the twin balance sheet issues, so there when growth declined, it led to the financial crisis as well, banking crisis as well. In case of India, it didn't happen. Our economy kept on growing, though impact was there on the growth, but it was not so much. If we remember, the whole world was slowing down. India was still going at a good pace, though not at the same pace as it was going earlier. But yeah, so it means the banks they kept on lending, right? Even though companies they were not paying back their loans, even the banks they started evergreening the loans, means restructuring their loans, right? Giving them more loans to pay back their already existing loans. So these kind of things started happening. So why it was so much? Why the banks were so much capricious? Because huge capital base, secondly backed by the government. So huge confidence was there in our banking sector that it won't falter, it won't go into crisis. So these things are explained here. As it says, balance sheet syndrome with Indian characteristic. There was a domestic demand, yes. While our country kept on growing, there was still a domestic demand, right? So, buoyed on the domestic demand, there was still the corporate sector has the contribution in the our economic growth. So, despite weak exports, on the basis of our domestic demand, we kept on floating. So here they explain unusual structure of economy. India has suffered from exceptionally severe supply constraints. So this shows basically that during the boom period, where was the major investment went? The major investment was in the infrastructure projects, where we had been lacking a lot. There was huge constraint in the infrastructure projects. So on one side, invested heavily on the infra projects during the boom period. financial crisis came. However, those projects became unviable. But infra projects, they has huge spillover benefits to the economy. So they started paying back. So based on those projects, based on those investment, our growth kept on tickling, kept on going with a modest pace. Whereas in case of US, that was based on the housing segment growth, the United States, but that didn't pay back that well. So this paragraph shows that particular discussion. It says the legacy of the historic mid-2000 investment boom was a curious combination of both TBS and growth. The twin balance sheet along with the growth. We had seen this. Then discuss about in other countries, this crisis had led to the banking crisis, bankruptcies as well, financial crisis as well. And even in case of India, whereas the bank started evergreening their loans, giving time to time, allowing time for corporate bonds to heal. How means again kept on financing them, financing their already existing loans even. Now come to the next page, page number 89. Is the strategy sustainable? So this is what happened in India. Now whether this strategy is sustainable or not, here they discuss. So there are two situations they have brought. One is under Phoenix scenario. Under this Phoenix scenario, it says that with the increase in growth would increase in the cash flows. With an increase in cash flows of the stressed companies, they can service their debts easily. Right? Because the increase in growth, more economic activity, more cash flows in the companies, stressed companies. Now they have the enough cash flow to pay back their debt. So this is the Phoenix situation. So what is Phoenix?
So it rises back from its ashes.
Yes, good. Phoenix is an imaginary bird, right? Imaginary bird that rises from its own ashes. Second scenario is containment scenario. In this containment scenario, they say to limit this NPA to a particular segment of GDP, and then increase the size of GDP, nominal growth rate of GDP, so that it fades away. The overall the problem that fades away. Containment. So we are doing the containment of the problem, containment of that NPA to a particular segment of GDP only, restricting to a particular one, and then increasing size of GDP. So ultimately, with respect to GDP, that problem will be very small, and the problem could fade away in this way.
Sir, is there any sort of term like GDP to NPA ratio or NPA to GDP ratio?
Yes, you could calculate that. कुछ न कुछ हर एक चीज का होता है definitely. You know the how much NPA is around I think 6 lakh crore and total stress asset around 8 to 9 lakh crore. You know the size of your GDP, you can calculate.
No, he was asking from PT point of view. Like,
Like
if
the
question say XYZ is related to which of them following.
Okay.
So
From
if
that point
a
of view,
low
it was-
GDP to NPA ratio means A, B, C, D. Then what does a normally low GDP to NPA ratio mean?
Low NPA to GDP ratio, no? Low GDP to NPA नहीं.
Okay.
Low NPA to GDP ratio means to the comparison of overall GDP, the portion of NPA is very small. It's beneficial for our country, means any of the economy. So consequence तो आप निकाल ही सकते हैं क्या होगा? Is there any issue in this? How much is the size of our economy in terms of GDP?
1 trillion. 1 trillion.
1?
It is 2.8, 2.9.
Not 2.8. Around we have crossed $2 trillion and $2.2 trillion. We are somewhere around 2.2, 2.3.
पिछले साल ही था सर 2.2 तो
हाँ इसी के अराउंड ईयर 2.2 2.4 इसी वी आर नॉट क्रॉस से मच ऑफ दिस
7.1 इस साल हुआ है, तो वही हो गया होगा उसके अकॉर्डिंग 2 2.5 पे भी होना चाहिए
2.4 के अराउंड था लास्ट टाइम आई चेक अराउंड 1 or 2 months ago. So around 2.3 to 2.4 exactly, because when CSO data comes again, then again you revise the figures, right? Now they discuss about the Indian scenario, what is happening in terms of cash flow and all. And it says that the aggregate cash flow in the stressed companies wasn't sufficient to service their debts, has fallen by roughly 40% in less than 2 years. Because if you understand, the first Phoenix scenario was what? The Phoenix scenario discussed about if along with the economic growth there is increase in the cash flow, then the debt could be serviced. But in certain segment the cash flow declined in the stressed companies. So they had to borrow in order to continue their operations even. Their interest obligation kept on increasing, whereas the cash flow kept on declining. So on they call it as square the circle, means they had to sell off their assets. Selling their assets, now once they sell off their assets, it ultimately again reduced their assets, which could have given them revenue, right? So now they have lesser resources to pay back their further their debts. So this problem kept on spiraling. Because how the companies will pay back the loans based on their assets. Now they have given example of power sector. In case of power sector, cost overrun at the new private power plants, or the more than say they discuss about, to cover this cost the company had to sell power at the higher tariffs. But what is happening in reality? Power coming at the lower tariff. So even these losses kept on mounting in the power segment. Just remember certain sector example if you want to give highlight with example. Then discuss about in 2016 that how the problem it has in fact uh, broadened its base. It is discussed in this paragraph 4.33. It says in 2016 a major portion of increase in NPAs, 4/5 of this increase during the second quarter came from mid-size and MSMEs. Right? So why? Because smaller companies they had been suffering from poor sales profitability for a number of years, struggled to remain current on their debts. So earlier the issue was limited to a set particular number of the large companies, large corporates. But recently it has been observed in the last year the increase in NPA, a major portion of that increase even came from the mid-sized companies, MSMEs as well. So it shows how this problem has widened its base even, where it was limited to earlier to particular one. So it is increasing in that way. Then telecom sector example is given with regard to interest coverage ratio. It has deteriorated, it says. Why? As a lot of new entries, they have increased competition, declined their profit margins. So a lot of price cutting we had seen, huge competition in telecom sector we had seen in the last so many years. This price competition definitely reduced the profit margins. So that is another example. Now we are seeing the consolidation, merging of the companies going on. Vodafone, Idea, right? Even once Geo came, the competition increased, but now the companies are merging. Airtel also has its plan with I think Aircel, right? 2 3 companies are again merging. Huh?
Airtel bought Tikona.
Okay, so ultimately it is seen in the next 1 year there will be around 5 major companies, 5 major telecom companies. Even there is a proposal to merge BSNL with MTNL.
Yeah.
Okay, so uh, even as per the economists, they say if you increase the number of companies till 5, the competition increases, will keep on increasing. The 5 is the optimum number of companies, they say. If you reduce them, it could lead to the cartelization. So if you say 4 companies, there are chances of the cartelization. 3 companies, chances of cartelization. So definitely, so that's why uh, even they need. That's why one of the basis is why BSNL to be merged with MTNL. They need to be a major, say, public sector company as well. That could not lead to cartelization, so that it maintains a balance in the overall market scenario. So till now we understood these certain things, that the NPA increase in NPAs, now they are widening their base as they are going for MSME and mid-sized companies as well. Then we discuss about because of all these issues, uh, private sector facing the problem of the corporate, their assets deteriorating, even the banking segment seeing deterioration of their assets. So private sector that led to the holding their investment. We had seen in the last couple of years there had been declining in the investment. Investment has been declining, and every other time in the budget, in the survey, the various debates that ask public sector to get increased, public investment to compensate this decline in the private investment. So it has been the call from the various sections that public's investment has to come in so that it can compensate the private investment, and it can not only compensate, but it can in fact crowds in the private investment. If the statement comes, public sector investment can crowds in private sector investment.
Crowd?
Crowds in.
Yeah.
Is it correct or incorrect?
Yes. Yes.
Yes, अंशित नहीं समझ में आ रहा है, अब बताइए आप.
सर पब्लिक सेक्टर सर जब ज्यादा इन्वेस्ट करता है तो सर जो बैंक्स का जो मनी है वो पब्लिक सेक्टर में ज्यादा जाता है, तो फिर प्राइवेट सेक्टर्स डोंट गेट दैट एक्सेस टू लिक्विडिटी टू फाइनेंस एंड इन्वेस्ट.
और अच्छे से एक्सप्लेन कीजिए. Now these are certain things that were outlined in the various previous budget survey by our FM. Finance Minister had said about it. Our this Arvind Subramaniam ji has also said in the last survey that why there is need to accentuate the public investment. It says it will crowds in the private investment. How it will crowds in the private investment? Crowding out of that is different phenomena. ठीक है? Crowd, because ultimately see, when there is low investment, nobody is investing. Who will create the infrastructure? Why the private will invest? Now once there is dip in the investment, public's investment starts coming in the infrastructure projects. It creates a huge benefit to the private then. A base where the private sector can also start feeling, yes, our country is growing, we are having the good infra. So they will also started investing. Right, so its overall investors sentiment gets a boost once public investment increases in the infrastructure specifically. And what is this crowding out phenomena that you study in your economy? What is that?
Disinvestment.
Bad money.
Yes, Patay, what is that?
Sir, basically,
Crowding out of private investment.
private, like if say public sector is borrowing more, there will be less money to lend by public sector banks. If say government is taking more loans, okay, it will result into less money to grant to private sector. So private sector will have less credit, access to credit.
Is this clear? नहीं समझ में आया, फिर से समझाइए इनको.
Uh, like
See,
government is borrowing from the banks or market. Okay, from the market it is borrowing. So people will have less. This money will decrease in the market. So so available credit to the private sector will also come.
This is
Our,
crowding out.
see, thing happens, there is no creation of new money generally, right? We don't print more currency. So from the available resources, only the government also borrows from market. Means resources are limited, and the same resources for whether the government invest or the private invest. Right? If the government borrows a lot, it would reduce the scope of private to borrow from the same resources. So it will crowds out the private investment.
So could you repeat that statement which you made? The private crowding.
Public investment. See, there are two different scenarios. Even these two statements can contradict even. Just as the two things that I said in the last 2 minutes. Once I said this, public investment can crowds in private investment. Now I think this is conditional. If this public investment is going into the infra projects. Now we cannot refute this statement. Why? Because even our survey says this, our FM says this. But you see, go pure into economic terms. Suppose this public investment is, you don't know where this public investment is going. Now, even this public investment, the government need resources. How the government gets the resources? Ultimately, it had to borrow even. More borrowing means less resources for private to borrow. So in that case, this statement looks somehow, having less basis, less buttress for it. But we support this statement. Why? By considering once this public investment is going into the infrastructure, or at the time when private investment is not coming already. But otherwise, to the pure economic concept, if the government borrows more, it crowds out the private investment. So we discussed two sectors example, telecom sector here. In terms of telecom sector, we saw high competition, more price cutting, less profit margins. Power sector, that need to be sold at the higher tariff, but it didn't happen in case of India. Lower tariff, more losses to those private, those power sector companies as well. So here discussed to cushion the impact on the overall economy, public investment has been stepped up considerably. But this has still not been able to fill the gap to arrest the fall in the overall investment. So still there has been fall in investment.
So what is the meaning of this term, gross fixed capital formation?
Sorry?
Gross fixed capital formation.
Capital formation, yes.
The gross fixed.
Gross overall fixed capital formation means the capital assets are being created somehow. Where is that? Okay. Growth and real gross fixed capital formation. Yes, regarding that only is about once you do the investment, you go for the capital formation. So it compares how the public and private and total how they have been. So the above things that has been explained here only. If you see the red line public, the public investment has increased. See this one, right? This is private. So there's a private investment and there's a total. So if you see here in 2012-13, right, the total investment was at this level. In 16-17, you can see the average even is lower. So though the public investment has increased, the gross capital fixed formation by public has increased, but still the average has come down than the previous level. So it has not been able to fill that gap. So still it says in short run the economy can still continue to expand based on our back of our consumption as it had been doing so during the boom years. Now coming to the next one, now we discuss about how the credit is taking shape now. Okay, based on overall the problem of TBS, what has been the phenomena? Now the banks, they have also become cautious. They have minimized their way of taking risk. They have lowered their credit growth. Right, we had seen this for the last 2 years. The banking credit has declined a lot. Right, why? Because huge NPAs. Now they have become cautious. They won't lend as freely they had been lending before. So once this happens, it's again a cyclical impact that has further on corporate, that impact further on the banking segment, and it's happening like that. So they have scaled, they have in fact put hold on their more lendings, and the private has put hold on their investment. Then here discuss in real terms, credit growth is now negative, the lowest it has been in 23 years. You can see how much credit growth has declined. Now, this credit growth has not been uniform across the different segments. Now, we discuss across different segments. Household credit and agriculture loans, they have seen somehow a good pace. So here there is relative advantage here in the agriculture loans as well, continued at a good pace. But corporate and MSME, they have been hit severely. So this is the in sectoral comparison of our credit, banking credit. Are you able to understand this thing, right? Huh?
So this credit, like the credit growth, this is now negative. So what are the reasons for this?
We are discussing the same thing from last since starting. The credit is has declined. Why the credit has declined?
Because the NP problem.
I think you know this answer. बताइए, आप ही बताइए.
Because the NP problem.
हाँ, बस. By default, when the company started defaulting, banks understand they have lent so aggressively in the initial time. The companies are not paying back, so it reduces the money within the banks itself. The capital formation of the banks decline automatically, and they will take decision more cautiously. Even you can see how the hammer of investigating agencies are putting on the banks. They force these referee institutions. One of the, I think, chief head of some banks was arrested by CBI last to last month. One of the case Axis Bank, right? Right. So when this thing happened, now the banks will definitely, they won't go so openly as they had been doing and going before.
Even Kingfisher loan, whoever approved, they are being investigated.
Right. So it shows household credit, agriculture loans going okay, well, good, fine, but major hit on the credit growth has been on corporates and MSMEs. So now we discuss what needs to be done. What needs to be done? It says what RBI has taken. Till now, RBI had been encouraging the establishment of private ARCs, private asset reconstruction companies. What generally they do? They buy the loans from the banks. They manage them by their own. They can convert them into equity as well. So ultimately, it could happen at the decentralized level. Banks to banks, different ARCs are there. They would deal with the different banks with respect to different bad loans. So individual loans are being converted into equity or whatever the way they feel like, so that the loss could be minimized. Right. So this had been the approach till now in the last few years that our the banking segment has adopted. Other certain initiatives: SDR, strategic debt restructuring, S4A. You need to remember all the initiatives. Question can come if you the question comes you should have on tips. What are the initiatives taken by RBI, other government initiatives, what should be done further. ये तीन चीजें तो याद रखनी है हमेशा ताकि because question is highly probable this year. We will discuss these are discussed again in the box in the end of the chapter. what these schemes are and how, whether what has been the impact. So now here it discuss about certain issues with respect to the existing schemes that had been there. The first issue, loss of recognition. So it discuss about AQR, asset quality review. So asset quality review conducted by RBI. So it basically to make the banks to recognize or realize their assets, their bad assets. So what you can read that, to force banks to recognize the true state of their balance sheet. Earlier they had been living in the certain fantasy till now. So the RBI set certain guidelines that these are to follow to realize, to recognize what is the true value of your assets and how much to be declared as an NPA. Because unless the problem is recognized, even in the part of recognition as in 4R, recognition means to recognize the problem first. Recognize the true value of your assets first. Then only you can go for the resolution or reform. Because unless you recognize the NPA, real NPA, how will you bring the strategy to resolve that? So here there has been, regarding asset quality review, we discussed that the banks, they continue to evergreen loans. We have seen how they had been doing so in evergreening of loans. They had been financing the loans that had already been given. Then issue of coordination, it comes in joint lenders form. What actually happened, the lending activity, it has been done by the major, there are various creditors. Different banks, they have given loan to, for example, Kingfisher. Right. Now, once this joint lenders forum is what? It is all the lenders to one company who all lenders who have given loan to certain company, corporate. So once the company is not able to pay back, there will be the joint lenders forum, and that to decide over how to deal with the problem, to convert that loan, that bad debt into equity, or to sell off that equity then to further in the market, right? To change the ownership of the company, maybe certain time it's issue of the ownership as well, the management as well. But here the issue has been in coordination. Why? There are different lenders. Once different lenders are there, they might have the different strategy for it. One say no, we'll sell off the equity. Other say no, we won't sell off the equity. Right? So it brings issues in coordination. That's why these are given here. It says where decisions can be taken by 75% of creditors by value and 60% by numbers. But reaching agreement in these forums has proved difficult because different banks have different degrees of credit exposure, capital cushions and incentives. Then third one is proper incentives. Now in the S4A scheme, so different points are regarding different schemes. So regarding S4A scheme, what is S4A? Sustainable structuring of stressed asset. Means what is there? I believe you might have read this scheme. Last year it was announced. What is this? क्या बता? हाँ?
It is like it is restructuring of the, let's say if we do have a company and some part of it is profitable and other is not, so we can as in restructure the loan as per as in since one part is not giving us the profit, so we can
divide those assets.
Yes, right. So
divide those assets.
divide the assets. Which asset is sustainable, which is not sustainable. Which is sustainable, let them sustain. You could refinance them further so that the company can recover. Unsustainable, sell off equity, whatever the way you pay, go for it. Right now, the issue here has been regarding proper incentives. Now, public sector banks, they are reluctant to grant write-downs because even in there are certain times their write-down becomes essential as per the economic sense. But then the public sector banks, they are not able to do so. Why? They would face the wrath of the public. That public banks are facing or are favoring the private. Suppose, for example, it become essential to write off loan of certain industries. And it becomes essential at a certain times to revive the economy. Because losses have been made. Suppose an industry has made the loss. Now losses have been made, losses have been incurred. And if the banks or the company don't find any way to revive the loss, so what to do? In that case, so certain times the situation demands write-downs, write-offs as well. But there at the time, it could bring the essence that government is favoring the private, and it could create huge cost in terms of political cost. So that is given here, and even they can attract the attention of investigative agencies as well. कि भाई कैसे आपने write off किया, क्या what phenomena have you applied for, right? Now to address this issue, BBB, Bank Board Bureau. Who is the chairperson of Bank Board Bureau? Vinod Rai, yes, correct. And Vinod Rai is also in certain other committee, if you remember. Yeah, what is that? COA, Committee of Administrators.
Yes, sir. Sir, I wanted to ask, is there a difference between a write down and a waive off? Writing down of loans and waiving off, are they same?
No, these are not same.
Like in write down, there is still a liability.
Yes. Writing down is certain balance sheet exercise. Okay. So
You provide time like
their balance sheet, they are just taken out of the balance sheet of the banks. But the loans have not been waived off by this.
they're still under some
Yes.
sort of
Yes. So banks can still go for, say, recovering after a certain period of time.
and waiving off is completely.
Yes. So Bank Board Bureau, they have okay, under where it was initiated. It was part of, say, Indradhanush plan, if you remember. So Bank Board Bureau has created an oversight committee. So it is proposed that it could vet and certify write-down proposals. So one certain committee says that these loans could be written down, then somehow it could provide cushion to the decision makers. They could somehow could be, you can say, protected from the wrath of investigating agencies. Capital, regarding capital issues, the Indradhanush scheme that proposed 70,000 crore rupees recapitalization by the government. How much has been done till now? In the last budget, how much was announced? I think 25,000 crore was announced in the last budget.
Yes, sir.
And this year it is 10,000 crore in this year budget. Total how much the government is to capitalize? 70,000 crore. And how much is the total to be capitalized by overall all the sources? I think it was 1,80,000 crore. So just check these figures. So out of 1,80,000, 70,000 crore is to come from the government. That is a proposal in Indradhanush. But still it says this capitalization, even if 70,000 crore is done, it is not sufficient even. They discuss about the road to resolution remains with certain obstacles. We discuss about stressed assets are concentrated in remarkably few borrowers, with a mere 50 companies accounting from 71% of debt owed by IC1 debtors. So remember this data, that 50 companies, they account for 71% of debt owned by IC1 debtors. And on average, these 50 companies owe rupees 20,000 crore in debt, with 10 companies owing more than, okay. They discuss the large over-indebted borrowers are particularly difficult to resolve for several deep-seated reasons. Why the large debtors, over-indebted debtors, those issues are more difficult to resolve. These are the points given. Severe viability issues, because they need the large write-offs will be required to restore viability of these IC1 companies. Second point is regarding acute coordination failures, because large debtors, they have the many creditors. When many creditors, then again issue in the coordination, right? Then serious incentive problem. As we discussed, the public sector banks, they won't get much of the incentives to go for the write-offs. They will be more cautious in that case. Insufficient capital as well. So all the earlier points, they will be summarized again here. Then bankruptcy law, it said it could have helped, but still it has not been able to resolve the issue. Why? Because still it is a new phenomena. It's still in the infancy stage, we can say. So it is discussed. The problem is that the new bankruptcy system is not yet fully in place. So the question, you should be able to remember it. The question come, why this new bankruptcy law has not been able to make much of the changes. So this is the reason there. Because the whole system is still not yet fully in place. And even when it is, the new procedures and participants will need to be tested first on the smaller cases. Then we could try them on the bigger cases. So it will take some time. And we don't have much of the time. We are already under a crisis in terms of TBS, twin balance sheet. So much of the time will be required by the time this bankruptcy law comes fully functioning effectively. Then we discuss about PARA, Public Assets Rehabilitation Agency. How would PARA would work? So here the PARA is proposed. What it can do, it can solve the coordination problem. How it can solve the coordination problem? Because it will be a centralized agency. If you remember, when there are multiple creditors, there was issue in the coordination. But when there is one public sector asset rehabilitation agency, right? So it will buy those bad loans from each and every, right? So there will be only centralized agency to handle this. So the coordination issue would be put aside. Secondly, it could be set up with proper incentive by giving it an explicit mandate to maximize recoveries within a definite time period. So the mandate will be fixed, right? Before banks, the issues are different because banks they could be questioned by the investigative agencies. They're not properly incentivized to say waive off the loans as well. But PARA would be a specialized agency with a certain mandate by the government. Then it could separate the loan resolution process from concern about the bank capital. Because ultimately when the bank they decide, they also have this thing in mind regarding their capital base, right? Whereas PARA, it will be concerned only about to bring the maximum value of the available bad loans, कि वहां से कितना maximum निकाला जा सकता है. Now next paragraph discuss how the PARA would work. It says it would purchase specified loans, for example those belonging to large indebted infra from banks, and then work them out either by converting debt to equity and selling the stakes in auctions or by granting debt reduction depending on professional assessment of the value maximizing strategy. So this is how the PARA would work. Once the loans are waived off, then the government would recapitalize the banks, thereby restoring them to financial health. Then they could further go for the lending activity. And once when the financial viability of the over indebted corporate is taken into consideration, is brought to it, then it could further go for the operation rather than just mulling over ideas to go for financing, how will finance and all. So from the both segment, it would be beneficial that the survey proposed. It says all this will come at a price because certain losses would have to be incurred, and at that time the government has to pay for the losses. So one source of funding, the government issues of securities. Government could issue securities to PARA. This is how PARA could be funded. Second, funding could come from capital market. Right, so PARA could just get capital market funding but from the equity share, right? Because it will be professional agency mandated for a particular task. So the professional agency, if it works efficiently, it will have more of, it could have in fact more confidence from the investors who could invest in para itself. Third, RBI. Even RBI could fund as well. How RBI could fund? Because RBI is holding huge amount of government securities. Right? RBI has huge capital base. The last economic survey that has discussed in one of the box that 4 hours, if you remember, right? Then it discussed from where the capitalization will come, from where the capital will come. One of the proposal was RBI already has huge capital base, right? Once RBI has huge capital base, ultimately, and that capital base is huge in comparison to other central banks. So other central banks, if we even go to that particular proportion, I don't remember, around I think 30% around of that capital to equity ratio that RBI has, whereas the other economies, they has very low this kind of capital base for the central banks. So even RBI can offload huge capital to the banks in that case. So here that capital can come to para. Then discuss establishing a para is not a panacea. What are the requirements? Readiness to confront the losses that have already occurred in the banking system and accept the political consequence of dealing with the problem. Secondly, then para is to be thoroughly professionals. That it has to be professional. It has mandated to maximize the. Then it need to follow the commercial rather than political principles. So ultimately, it has to be professional agency to follow the commercial principles, not based on the political compulsions. Independent agency staffed by the banking professionals, clear mandate of maximizing recoveries. So all these requirements should be fulfilled for effective management of the issue. Third issue is regarding pricing. It says if the loans, for example, because the banks would be selling their loans, bad loans to para, right? Then para would do whatever it wants to convert into equity or whatever it wants to do. But what if the banks, they are willing to send their loans at the higher prices, right? So it discusses about that particular issue. It says if the loans are transferred at inflated prices, so banks would be transferring losses to rehabilitation agency in that case. So in that case, the private sector won't be willing to invest in para then, isn't it? Because then its professional mandate would be compromised in that case. So to resolve this problem, so market prices could be used. So these are basic issues that should be dealt with. In conclusion, we discuss here 4 Rs: reform, recognition, recapitalization, resolution. These were discussed by economic survey last year, 15-16. So here we see what these says. So you come with R. Where is the first R? So discuss first about the first R, reform. The past few years have been discussed what reforms have been taken. Then discuss about recognition. So recognition of their true value of their assets, their loans. So asset quality review, banks have recognized a growing number of loans as non-performing assets. So now, following RBI's asset quality review, now banks, now they're recognizing more number of loans as non-performing. third recapitalization, third R. So that needs to be funded by the government, at least for the public sector banks regarding capitalization. Fourth R, resolution. It says even if the banks, public sector banks are recapitalized, they are unlikely to increase the lending until they truly know the losses they will suffer on their bad loans. How to speed up resolution? They discuss about the East Asian countries, their precedent, that they could able to resolve the issue, most of the large cases within 2 years. So how efficiently they have managed the issue, you could see that. What they did, they brought centralized asset rehabilitation agency, what is proposed in this survey as well. And they discuss that one of the reasons why they were able to do so, because they were more under pressure. It was more crisis there. Whenever the crisis is more, the steps could be more.
Harsher than
Yeah, the steps could be with a more hammer hand, you can say, with a more strong hands, with more political will, the stand could be taken. Here, second is more efficient mechanism. In case of India, we had been following decentralized approach with the private ARCs dealing with the different issues in the silos. Whereas here, the para could have a centralized agency, could deal the cases comprehensively, and we had seen how the different benefits that para could bring with respect to coordination and all those other aspects. So this is something proposed by survey to be considered. We see certain, now this is important, it gives you idea initiatives by RBI to handle this situation. Timeline is given 525 flexible refinancing of infrastructure. So directly remember by 525. It is even known by this. We'll discuss one by one. Secondly, change in ARC fee structure. Thirdly, SDR, strategic debt restructuring. In 15, asset quality review. In 2016, S4A. Now discuss one by one. 525. What is 525? So here, basically the loan given to infrastructure projects, they have the long gestation period, right? So the loan given that they could that could be extended to 25 years with interest rate to be revised after every 5 years. So basically the purpose is so that the loan could be more sustainable. They could pay it back because that requires more time to break in profits. But it also led to evergreening of loans as well, because over longer period when these are spread over, the companies they face higher interest burden, ultimately more difficulty in repaying back, and more piling of their loans. So evergreening is the issue here in 525. In ARC, set up under SARFAESI Act 2002, what was the mandate of resolving problem loans? Difficult to resolve the assets they have purchased, so they are only willing to purchase loans at low prices. So now there's a figure that is given, you can remember it. Only about 5% of total NPAs at book value were sold over these 2 years to ARCs. So only small proportion of bad loans have been sold to ARCs. Then strategic debt restructuring. Here banks could in fact convert their debt of the companies into the equity to 50% equity and sell them to the highest bidders. So one of the purpose was this one, because once the debt is the debt of the company is sold to the certain, so ultimately the principle is The shareholders, for the shareholders, means who should pay for the default? Who should pay for the defaults? For the investors in the company, basically. So banks should not pay. These has been the principle for SDR, joint lending forum, so that what do you call them? People who are the major owners of the company, promoters. So the if who have to pay if in any case any company defaults, promoters should pay for it, right? So this is the basis behind the strategic debt restructuring. Asset quality review recently taken last year, last 15-16 by RBI, so as the banks could recognize true value of their assets. As for a independent agency hired by the banks will decide on how much of the stressed debt of company is sustainable. The unsustainable will be converted into equity and the preference shares. But here no change in the ownership of the company. So these are various steps taken. You could also bring joint lending forum, one of the another step. So remember directly 525 ARCs, SDR, GLF, joint lending forum, asset quality review, S4A. So these are 6 steps taken by RBI. So these are steps by RBI. RBI policy actions. Okay, this is how I made my notes. Anyways, I come to economy to see if any other steps by RBI.
So is the OneNote getting updated?
Yes, we updated for last like a week or 10 days. There was, I think, very less work on this, but we'll do so of the previous topics as well. Yes, you should remember these 4 Ds as well. These are very important. These are also important. Now, these 4 Ds were announced in Economic Survey 2015-16, 14-15, last to last year Economic Survey. So, 4 Ds, 4 Rs, right? So, and the 4 Cs, to different issue regarding it. But these are certain proposals you could give in the suggestion. What these 4 Ds are: diversify, decenter, differentiate, and deregulate. What this deregulate talks about? Deregulation is regarding priority sector lending.
Deregulate private.
Priority sector lending, PSL. The first one was deregulate, then it was diversify, then differentiate, and finally decenter.
So is the order also important?
No, it was given like this in survey, so Nothing like that. Even if you remember 4 Ds, sufficient. Yeah, but with 4 Rs, the order could be there. Like recognition, first you recognize what the issues are. So deregulation means we discussed that priority sector lending, a major portion of banks is stuck into somewhere which may not give returns to the banks. Are able to understand this thing? Because you see CRR, SLR, already a huge capital of RBI or say banks, they are not able to lend. Then you have huge portion for priority sector lending as well. What percentage of their uh, uh, what do you say that
40,
aggregate net banking credit A and BC? 40%. So 40% of A and BC aggregate net banking credit that should be given to the PSL. So means huge capital means the of banks they cannot lend it. Lending is the business for bank from where they get the benefit. So means a huge capital is locked somewhere which they cannot be utilized. So that's why the survey proposed deregulation. Okay, deregulate it. So one way survey proposed that because it's a highly huge political issue it will become if PSL is scrapped off, right? So why not to bring everything into PSL slowly each and every sector. So including every segment will automatically just wind out the compulsions on the banks to give loan to certain segments. And you differentiate. This differentiate was
So differentiate good loans and bad loans.
no. Okay, diversify. Diversify is regarding diversifying the financial system. More number of banks and different kind of banks, right? So some new banks were announced. Different kind of banks could be there, like payment banks and all. So that was the proposal in case of diversify. Even more efforts could be done to strengthen the capital bond market as well. Dissenter is regarding exit.
So this 4D won't be coming in this video, I think.
No. In PT it won't come, right? They they don't ask specifically for these because proposals could be by different name as well. Now this is not the government proposal, isn't it? So in PT they cannot ask, but in mains you can write certain suggestions. Key economic survey 14-15 these suggestions, 16-17 these suggestions, 15-16 these one. So you have 8 to 10 points automatically on your tips then. So these are certain problems that I had noted. Resolving the NPA problem, how this could be done. So government announced 70,000 crore. Okay, Indradhanush, we know about it. 7 steps, starting from A, B, C, D, E, F, G, like this. You remember, I believe. So they should be on your tips. So Indradhanush, S4A, ARC, Debt Recovery Tribunals, Amendment to SARFAESI Act, indemnity to bankers to tackle NPA. Now what RB has done, S4A 525, SDR, CDR. CDR is corporate debt restructuring, joint lending forum. So these are steps by RBI. Then how to tackle willful defaulters. Now there are other government initiatives regarding that if you remember. In the budget also they have said this thing, they will tackle willful defaulters heavy-handedly. Even certain law would be passed that would help to confiscate the assets of these willful defaulters with more effectiveness. capitalization, banking governance, Gyan Sangam. What is Gyan Sangam?
For
Sir,
for
you said that financial people related to financial like
me for
these
Right.
IES officers and the commissioners, they meet with Modi and
Means the banking sector people, they meet, they assemble, conclave kind it is, where they discuss about what kind of banking reforms can be brought. Last time it was in Gurugram, before that it was in Pune, I think. So two Gyan Sangams they have been held till now. In last Gyan Sangam they proposed uh, consolidation of the banks, banking consolidation they proposed. Regarding corporates, what could be the initiatives? New bankruptcy law, National Investment and Infrastructure Fund, clear the stalled projects. So we have uh, already done a good improvement on this front of stalled projects. So this is the example, the whole auction after 80%
ARC
beneficiary.
is not by RBI or it is by
Yeah, RB it is. These are steps written again S4A, here S4A as well, right? But ARC are independent private institutions. These are private asset reconstruction companies, right?
So these are the steps for tackling like
NPA or twin balance sheet problem, you can say, whatever, both are same. Because once you tackle NP, you also have to tackle the corporate balance sheet also. That step should also be there. Now come to a box where Para is discussed. Why is a public sector asset rehabilitation agency needed? The first point says it's not just about banks, it's not about. Okay, first we understood how para would work in our initial discussion, that is, certain benefits are also given. Now, again, it is discussed here. It is not just about banks, it's a lot about companies. It talks about that till now, public discussion has been how we'll bring bank capital to handle the issue. But one of the major issue has been regarding the companies. So, to resolve the bad debt in the first place itself. So how you resolve a bad debt? You should have a specialized agency in that place. Secondly, it is an economic problem, not a morality play. So it says certain times the companies they divert the funds and these kind of issues comes into play. But it's a vast bulk of problem has been caused by unexpected changes in the economic environment. So we need to understand that timetables, exchange rate, growth rate assumption going wrong. Third, the stressed debt is heavily concentrated in large companies. So there need to be centralized agency to handle those large debt.
So ये line we can use for lots of Indian policies. Morality play.
Yes,
Like
yes,
it's economic problem, not a morality.
yes.
We in public discourse I was reading some research papers on corruption on that we confuse that corruption problem as a morality problem instead of looking as a problem of state capacity. Yes.
See, there are different opinions on that.
Yes.
ठीक है. So I think you should not restrict yourself to to one opinion, because it's not only one you are writing an article in newspaper. It's about how do you write the whole good balanced answer.
I'm just talking policy.
Yes, yes, you can write many of the points we study here. Now discuss about that these companies are unviable at current levels of debt, requiring debt write-downs in many cases. So certain time the steps have to be taken by the government, convert debt to equity, take over the companies, whatever, and then sell them at low. So certain times government has to take tough decisions. Then banks are finding it difficult to resolve these cases. That is not already using certain ways by which they are trying to resolve it. but delay is costly. They are refinancing it, evergreening the loans. So by doing delay, they are not resolving the issues, and this delay is coming at a cost. And progress may require a para. Why? It's a professionally run central agency with government backing. Well, not without its own difficulties. So this is the proposal by the survey regarding para. You're supposed to write, say, backings why para should be there, can resolve the issue that was discussed regarding various positives of para in coordination, in taking the, I believe you remember, have you noted them down? Discuss किया ना हमने?
Yes, sir.
Yes.
हाँ. So there the bases are given, certain points you can pick up from here. So the whole chapter is important. Otherwise, sometimes a few chapters you just can go through the major headings and you can understand those. Why it is important? Because the completely it is linked to the current scenario.
They can even ask essays,
Yes.
like they asked on jobless growth.
Yes, jobless. One of the it was a question in 2015 mains regarding jobless growth in paper 3 economy, and this time they asked an essay over it. क्या होता है प्रियदर्शनी? What do you mean by this jobless growth? क्वेश्चन भी आ चुका है, ऐसे भी आया हुआ है इस पे. सोचो जरा, just think over it. Okay, you people go through this main points right now. Just अभी एक बार just have read these slant lines initially. First 2 pages you read and then conclusion you read. अभी एक बार पढ़ लीजिए इसको, so that you recall इसी चैप्टर का introduction, the initial 2 pages and the last.
So can you show the page number 83?
83.
Because it is having black and white content, so I can't. Yes. Yes.
Are you done with this?
Yes.
बताइए major points बताइए. Try to recall the points.
Brings balance sheet problem. Yes, path has been different to other countries
Hmm.
because yes, because India's growth was based on creating infrastructure
Hmm.
and services and all the convenience that were covered. In contrast to the European countries, whose growth was based on banking and all that.
Hmm.
So Indian student balance sheet problem was different in other countries. But in essence, the problem was the same that during the expansion period, we during the boom period we overexpanded, and when the boom period subsided little, we are struggling to pay our debts. And so
So how it is different? How Indian twin balance sheet problem is different from other countries?
that their problems were their problems when the twins balance sheet problem happened, it subsided with very low growth, and it impacted the economy in a much larger way than it is impacting in India.
Right. Why so? बताइए.
So this it talks firstly about the NPAs, like our public sector banks. 4% of the NPAs are with the public sector banks, and 40% of the corporate debt is owned by the IC1 companies. So it's a basically vicious circle where which is detrimental to the growth, because in the first place the companies they are not having enough money. They are not capable enough to invest more, or all the more the banks are more fragile to invest. So it's creating a vicious circle which is detrimental to the growth.
अच्छा, my question was
How
how it is different from other countries, and so he answered that in our case, even after global financial crisis, we sustained a good growth rate.
Because you have a
And
good
why
PSB.
it happened? Yes. Huh?
Because we have a good PSBs in India. First, they have a good capital base, and secondly, they are backed by government.
ठीक है. What else? What other point?
Sir, the investment majorly went into infrastructure.
Infrastructure. ठीक है. So these are major things.
Supply side.
Yeah. And even our production kept on buoyed basis in the domestic demand as well.
We have a large delivery market
Yes.
in contrast to the other countries.
Though the demand from the world started declining, but we had the domestic demand that kept on fueling our production. ठीक है. So what else? So what is given? What else is discussed in survey?
Para.
So they discuss about previous steps and then they brings para. So what were the previous steps discussed by a survey?
The first was ARC.
Starting से बताइए.
Refinance.
Sir, first is S4.
525.
525. S4A.
Then
S4A तो लास्ट है आपका. S4A सबसे लास्ट में लिखना है.
ARC.
Sir, ARC.
Then SDR.
SDR, GLF, right? Then S4A.
AQR, then
AQR, yes, asset quality review. What the government is doing on this front? Government has Indradhanush. What else?
Indradhanush, DRT, Surface Act.
ठीक है, तो you can remember all the steps. What are the steps taken? What else can be proposed? So you can bring the proposals of survey. What was proposed by survey in 2015, 14, 15?
4D.
4Ds. What are these 4Ds?
Deregulate,
Deregulate,
diversify,
differentiate,
decenter.
decenter, right? Then 4 Rs.
So reform,
Recognition,
recognition, reform, resolution, and restructuring,
recapitalization.
Recapitalization. What was the issue? Why these private asset reconstruction companies, they could not bring the results? How Para could bring the result?
The centralized agency coordinates capital. As a government, we can get capital.
So because Para is more of a like a professionally run agency, having a good banking people.
Right. What else?
And,
he told correct point. Coordination problem was there. Now that problem won't be there. Time framing, mandate, government support, backing, capital base also, right? Okay, as I was discussing about that RBI, one of the capitalization source could be from RBI. Last year economic survey discussed, RBI has huge capital base, right? So that asset to equity ratio, that it is calculated in that term. How it is calculated? Asset and equity. So it says RBI has huge capital. Now that capital can be deployed to capitalize either the public sector banks or para. So from where the para can get the funds, government can capitalize. Secondly, RBI can capitalize. देखो पूछ ले आप लोगों से कि पैसा कहाँ से आएगा पैरा के पास, because ultimately it also has to pay for losses at certain period of time. So there is option for RBI to do so as well. So what are the financial resources available for para? बताइए जरा. Government, because it will government owned agency it would be. Secondly, RBI. Third, from capital market, right?
Not that developed.
Hmm?
It is not that developed either.
Sorry.
Capital market.
Yes. Now you see that it says even at current level, RBI is already exceptionally highly capitalized. In fact, it is one of the most highly capitalized central banks in the world.
Now after demonetization.
Yeah, now more huge more capital has come back in terms of decreasing its liability. So how this capital can be deployed? There are certain ways. One thing is to recapitalize para. Secondly, extinguishing debt to demonstrate government is serious about strong public sector fiscal position. Even debt can be paid off by this huge capital. Now there are certain issues, objections to this strategy. Adequacy buffers. Now, do we really have, after this capitalization, do we really have sufficient buffer with RBI? Buffer in terms of available capital with RBI. Now it also says a large chunk of RBI asset is in terms of net foreign assets. Right. So these foreign assets are essential for what purpose? The foreign assets with the RBI are important for what purpose? Yeah, because for
We have to maintain some fund.
the exchange rate also need to be at a stable position. Certain time RBI intervenes in terms of pulling the dollars out of the system or supplying the dollars into the system.
Yes.
Right. So that is one way. Now,
Not to absorb shock.
yes. So it should have certain level of capital base in terms of net foreign assets. But when any of the central bank has huge net foreign assets, it can also lose the capital. How? In case our rupee appreciate. Rupee appreciate with respect to dollar. So overall value of the capital of RB will decline. So it is given here only few countries, specifically Norway. It has around asset equity ratio around 45%. इंडिया का अराउंड है 30% के अराउंड है. ओवरऑल एवरेज इज समवेयर अराउंड 15-16%. So हम कह सकते हैं if we have the say this capital ratio asset equity ratio at 30%, even if it bring it to the world average of around 15 to 16%, a huge capital can be offloaded. Now come to the next chapter. Fiscal framework, the world is changing, should India change too? In what sense world is changing? As we have seen regarding the fiscal framework, basically the talk is regarding fiscal framework. In what sense the world is changing? As the world had been pursuing, the world economies, the leading economies, they had been pursuing prudent fiscal parameters, fiscal consolidation, certain limit on the fiscal deficit. The European Union brought 3% of that particular target. From there, Even India brought the same target of 3%. Okay. So, but we have seen that somehow in the past years, specifically after global financial crisis, the leading countries, they have changed the scenario somehow. They have gone for fiscal activism rather than fiscal consolidation. So they have seen fiscal activism to be a way to come out of this and to ride in the high growth path. So they could compromise on fiscal consolidation path even. Whereas in case of India, if you see, our Indian trajectory has been progressively, steadily on the fiscal consolidation. We are supposed to achieve the 3% in the next year. Around 3.5% I think we have in this year budget that was announced. So it is in that regard this discussion is. So you can see that advanced countries have embraced fiscal activism. Read this all these italic lines. Have you gone through these italic lines? Done? Okay, now then you discuss in introduction part that uh, after this global financial crisis, even the monetary policy has experienced a paradigm shift. As the fiscal consolidation has seen a shift in terms of fiscal activism, same monetary policy has also seen a shift. In what way? Near zero interest rates in those countries, economies, if you see, quantitative easing, upturning all normal institutions, and even to negative interest rates. So even on the monetary policy, there had been huge change, paradigm shift there had been. Now, as I say, the monetary easing has, say, gone a long way. Now it's fiscal policy that is seeing the change. So fiscal policy is seeing the paradigm shift in terms of going from fiscal consolidation to fiscal activism. Generally, this fiscal activism is effective when monetary policy is at the zero lower bound, at the lower levels. Now, certain points are given in terms of what had been being followed. Then, thirdly, it says about fiscal policy is effective in increasing GDP. How it will help? You understand it because more GDP, more tax revenue, and ultimately higher economic growth. Then estimates of sustainable debt levels should be revised upwards. In any event, then says debt sustainability is ultimately less about ability to pay and more about willingness of the political system to honor its obligation. So in overall, it says the policy shift has been from the stocks to flows. Flows are the deficits and stocks are the debt. So greater activism in flows. And minimizing concerns about the sustainability of stocks. So, as it's with the fiscal activism, the countries are going for higher fiscal spendings,
So like
right?
thing is that sir, in USA their debt is meaningless most of the times. For example, they are again printing
Yes,
$1
yes,
trillion dollars,
yes.
so they can allow that fiscal and that.
Yeah, the thing is because the countries with the hard currency they can do so,
Yeah.
which is accepted everywhere,
Yes.
right? And US definitely. So it is one of the reason why they can go. They can India cannot go for this, right? We have our own constraints because every other time US comes at a particular level because but everybody trusts states that states economy cannot falter because they are having the dollar at this stake.
Yeah, they can print and
So that's why those economies they are going for more concern towards the say you can say physical activism, whereas India's stance has still now been fiscal consolidation. And it compares how, like some European countries, India is still inflicted by twin balance sheet problem, so which is having hold on our investment, credit growth, and all these things. But how India's situation differs from advanced economies, we can say, as the advanced economies they have very near zero growth rate, whereas in case of India, growth rate are substantially growth rate even growth rates are higher, and even the interest rates are also higher. So as growth rate is higher, inflation rates are higher. When interest rates gets higher, the monetary policy stance becomes to increase the interest rate. So generally in our case, interest rate is higher, and when interest rate is higher, because ultimately when the fiscal activism can work to the best level, when monetary policy makes the interest rate at the near zero level, as you discussed just now. So even in from the economic point of view as well, the same physical activism cannot help unless we have the near zero interest rate, very low interest rate. And we cannot have the low interest rate. Why? We also need to tackle the inflation, because higher growth, more chances of inflation.
So this interest rate,
Hmm.
so this is like the lending or borrowing interest rate.
Both are linked to each other. When so RBI increase the rate, banks generally increase both of the rates. They should in fact do that, but they will maintain a margin to get the benefit out of it. ठीक है. As if the question comes, which of the following are responsible for NPA problem in India? Which of the following can be responsible for? No, okay. The question is, which of the following can be responsible for low credit growth in our country, specifically in the banking sector? I'm concerned about. 1, 2, 3, 4. High NPAs. Which of the following are linked to the low credit growth? High NPAs,
Low credit.
low credit growth. ठीक है. High NPAs, CRR, SLR, second point. Third point, priority sector lending. Fourth point, competition from the small saving schemes. Small saving schemes like PPF and all these. Right. How many points are these? 4. Okay. Options 1 and 4, 1 to 4, 1 only, and all. Hmm? All or a few among them? Kushagar. Your name is Kushagar, right?
Yeah, Kushal.
बताइए.
Sir, one and three option.
3 क्या है?
Priority sector lending.
Okay. Yes, Vibhu. Anchit.
So thinking.
प्रियदर्शनी. क्वेश्चन क्या था? क्वेश्चन फिर से पढ़िए.
Which are the following are responsible for low credit?
Sir, one only.
Hmm?
One only.
Which of the followings can be responsible for low credit growth
Can
in
be or
R.
I said can be और
Can?
R हाँ R में भी let's see answer would be all
और नो
all आएगा आंसर इसका
सर लेकिन वो एसएलआर और सीआर तुमने कम कर दिया था
नहीं अरे फिर भी है तो सही ना
Trick question.
right okay how the credit growth on what parameter credit growth depends
on all these factors.
Yes, sir.
just the credit growth depends how much funds the bank has how much funds that can be lent
Surplus itself.
funds तो बहुत हैं but how much of that capital can be lent जिसको lend किया जा सकता है
क्योंकि सर वो फोर्थ में भी सर कंजेशन तो हो नहीं रहा है फोर्थ पॉइंट में भी कंजेशन फ्रॉम competition.
Last year तक था now they have
Yes,
they're
sir.
trying to reduce the gap
Yes,
but still the competition is there
Yes, sir.
competition तो अभी भी है
Good question.
समझ पा रहे हैं प्रिया क्या क्वेश्चन है क्वेश्चन क्या था कि credit growth in the banks it depends upon how much money is available with banks that could be lent ठीक है now with CRR SLR a major chunk of money that cannot be lent if you reduce CRR SLR banks can lend more समझ रहे हो then another point was regarding PSL priority sector lending now even that is fixed to somewhere certain areas then you have question NPA तो directly linked है there is no discussion in that small saving schemes yes there are schemes like PPF and all these schemes where the interest rate is high
They are more attractive.
they are more attractive so where will you go and deposit your money जहाँ पर आपको ज़्यादा इंटरेस्ट मिलेगा वहीं जमा कराएंगे ना आप वहाँ जमा कराएंगे तो अल्टीमेटली आप बैंक्स के पास जाओगे नहीं तो हाउ द बैंक्स विल गेट द मनी और बैंक्स से पैसा नहीं आएगा तो कैसे लैंड करेंगे आगे वो ठीक है
So please do more of such questions, which require more.
आप क्वेश्चंस रेगुलर सोल्व कीजिए बिकॉज यू गेट द टेस्ट रेगुलर प्रैक्टिस करो टेस्ट की मोर यू प्रैक्टिस क्वेश्चंस मोर योर थॉट प्रोसेस विल डेवलप एक दो क्वेश्चन से बहुत ज्यादा फर्क नहीं पड़ेगा बट इट हेल्प्स यू इन थिंकिंग इन डिफरेंट डायरेक्शन बट प्रैक्टिस मोर
50 क्वेश्चंस सर रोज कर दिए
हाँ अगर आप कर रहे हो इतना देन इट्स ए गुड
तो प्रीलिम्स की तो 50 हो सकते हैं तो प्रीलिम्स की तो हो जाते हैं मेंस की नहीं करते नहीं वो सब बोल रहे हैं 50 इज डिफिकल्ट 51 कैन डू
how you can make your habit to practice daily because even prelims are not far away and in last moment chances are for you to panic
Sir,
कि
what
हाँ
tips you give for remembering these facts? The last two prelims have becoming more and more factual.
revision only or what can we say
Revision as well.
First, African conference and the weight of that, these kind of questions.
That is current affair.
No, but factual they become
Still 60-70 question are doable, sir.
Good. If you are doing reading and if you're reading newspaper daily if you are reading the current affairs daily revising it then you can do so questions were not so difficult last year the thing
So they
is
were easy.
whether you have read it or not
Yes.
because people were not expecting so much portion of current affairs so but you should be ready for any of the anything
Maybe they said no current affair.
but
That's nice.
That should
but still I think current affair portion will be a major portion why because
Now substantial.
so 30 to 40% still 30% still you can expect क्या आएगा इतना
30 to 15 doable.
Then discuss about India's situation, how it differs from other advanced economies. They discuss about how our growth rate is higher, leading to higher inflation, and definitely our monetary policy had to work accordingly with the higher interest rate. When interest rate is higher, we cannot go for fiscal activism in that case. Then discuss about comparing two certain last instances of our vulnerability of 1991 and 2013. 1991, what was the issue? Balance of payment crisis it was, right? Now even this balance of payment crisis with the rise in the fiscal deficit. Now this is somehow they have linked to it. Now we come to next one. It is discussed there. India and the world stocks. In the stocks, they discuss about debt. So debt to GDP ratio. Now India also appears to have a stock problem. And that is debt to GDP ratio. How much is debt to GDP ratio of India? Debt to GDP ratio. You should be able to remember how much. Yes, good.
75.
66% around. And how?
67 points.
हाँ इतना ही है सही कह रहे हैं आप 67 60 इसके around 67% around it is and target is to bring it to 60%. So certain facts you should be able to
So
remember.
how is this stocks is linked with debt to GDP ratio stocks problem?
Stock is what? Means they have differentiated.
No, but we are talking about government debts. No, debt. Government debts is not through stocks, no?
Overall debt is debt.
Okay.
It is not. They are not differentiating government debt or the government debt will be different thing then.
Yes.
When you say only debt, it means overall debt. And discuss about 5.14 India's experience on its external debt obligation. In 1991, it says the issue still has been linked to the higher fiscal deficit that India has faced. Then it says gold from RB was flown in a special plane and placed in the vaults of Bank of England, to provide collateral and demonstrate India's seriousness about its debt obligation. It just show how India was serious about its debt obligation. That nothing much. Second point, debt dynamics. Not much to learn about it. Various equations are given. What is something that you can see here in the primary deficit? What is primary deficit? What is primary deficit?
So deficit excluding the interest.
Yeah, fiscal deficit minus interest payment, right? So it's this show the vulnerability in case shortfall between receipts and its non-interest expenditure. It means India's government, central and state both, is not collecting enough revenue to cover its running cost. Running cost is even we are not able to pay back our not able to pay back our interest payment if there becomes a huge proportion of fiscal deficit. कि बहुत important है नहीं ये chapter इतना you don't find much. And discuss that if one day growth were to falter, as you are having good growth rate, but if one day growth falters, an interest rate to rise on a sustained basis, then what would happen? Debt ratio would also rise spirally, right? And this is what actually happened in Greece. Directly come to conclusion. Read these 2 points, 5.27 and the next one. In many ways, India's economy is converging towards large, open, prosperous economies of the West, but its trajectory is different. What is the difference? While India's pace of growth has quickened in the past quarter century, the dynamism of advanced countries has ebbed, particularly since GFC. And this has led to the fundamental divergence of fiscal perspective. What is the divergence? The advanced economies, they have tried to follow the path of fiscal activism, whereas we have still now continued to the fiscal consolidation. So we have FRBM Act. For that, we have the FRBM Review Committee to set out new vision for the next 21st century. So what to do? Just read introduction and conclusion. That's it in this chapter. और कुछ नहीं पढ़ने का है खास इसमें. So read the introduction, conclusion again. That's it.
So what was the purpose of writing this chapter?
Well, they're not writing this chapter for, you can say, for our preparation point of view in mind. We try to filter what is important for us.
So do we need to learn all these economic jargons?
Done. Now come to the next chapter. This is fiscal rules, lessons from states. So basically, these two chapters, an earlier chapter was in terms of global context, the fiscal framework, what is the path followed by the world, other countries, advanced economies, and what India is doing. So here, the lessons from states means what states are doing, right? Because just how fiscal deficit target for our country, for our central government, is 3%, same 3% for all the states. So combined central plus state we have 6%. Okay. When we say, for example, tax to GDP ratio, 16 around 17% it is around. Then is it central state government taxes both or central government taxes only? Generally, what we say, tax to GDP ratio 17%, right? Does this include taxes of both central and state government or of only central government?
I think central only.
Whole.
They're pooled in.
The overall, it is the overall tax to GDP ratio. We
It includes local taxes also.
all the state and all the
All
taxes,
taxes we
all
have.
taxes. So discuss about how the most of the states they maintain their target fiscal deficit levels. So there is fiscal responsibility legislation, just how FRBM Act we have, right? That it was enacted in 2002, 2003 it was adopted by Center. So we have for the states fiscal responsibility legislation for the different states. So then discuss FRL was not the only basis for maintaining the requisite fiscal deficit targets. Then discuss about other aspects of it. GDP growth, increased transfer from center, decline in interest payments, and increased central CSS expenditure. So these show that this FRL, effectiveness of FRL was not the sole cause for maintaining this fiscal deficit target of 3% achievement by the various states. These were other things. Because with GDP growth, what will happen? More revenue to the government, right? More transfer from center, again more revenue to the states. Decline interest payment, again more revenue will remain with the states. And more CSS expenditure means less requirement for the states to do the expenditure, right? Central government is doing its part. Now there are certain challenges they discuss, certain fiscal challenges. Pay commission recommendation. Now as central government pay commission comes, same way state government they follow certain of those recommendation. The Haryana government follow in toto. I think it became the first state to follow this, right? So it increases the state's obligation to pay more of the revenue to these employees. Challenge in terms of growth, rising payments from Uday bonds as well. Now it also became an issue to meet fiscal consolidation on one side and resolving the power sector issues on other side. Now this chapter is also a small chapter. Only a few things we will learn. Means what are from our point of view. Now regarding fiscal consolidation, how did we started our path? It is FRBM Act. So FRBM Act, on the same way, it was mirrored by FRL, Fiscal Responsibility Legislation, adopted by the states.
सर इंडिया की टोटल बजट में स्टेट्स का बजट कितना है?
Different. They.
टोटल कंबाइंड स्टेट्स.
I didn't get your question, miss.
हाँ?
I didn't get your question.
Sir, मतलब India's budget, we have a central budget, and then we have the states budget.
ठीक
So
है.
total states budget is how much year?
We cannot say. आपको सारा निकाल के ऐड करके देखना पड़ेगा.
40%.
हरियाणा बजट दिस ईयर वाज 1 लाख करोड़. ठीक है, वो पढ़ा था देन आई रिमेम्बर. ठीक है. बट
So the finance minister, I think, made this comment that
what?
I remember, like, forgot the figure that 40 or 50% of the total budget is from the states, but
40 or 50%?
yeah, he gave that figure.
Means
So he said, but we should, but instead of
नहीं
focusing on them,
दोबारा बोली क्या कह रहे हैं? 40
सर टोटल जो बजट अगर इंडिया का टोटल बजट स्टेट और सेंट्रल में कंबाइन करें तो इतना
अच्छा पूरा कंबाइन करें देन.
हाँ, तो पर्टिकुलर परसेंटेज इज फ्रॉम स्टेट्स बट ऑल द फोकस इज ऑन सेंट्रल. Instead of the focus should be more on states. He was making that state budgets instead of focusing on state budgets. He made that comment.
But that is also centers पैसा मतलब खुद का तो मतलब आने रहता है. नीति आयोग allocates such and such money to.
नीति आयोग is very
I cannot comment on this. चलो आगे देखते हैं. Then discuss that how the position of financial position of states improved considerably after 2005, and fiscal deficit was reduced to the requisite level and revenue deficit was eliminated. This is something you should remember whenever we discuss about fiscal consolidation or we want to improve our fiscal parameters. So what remains the target? We never say eliminate fiscal deficit, right? We have certain because we understand there will be fiscal deficit, and fiscal deficit is not bad in the overall sense. It depends whether this expenditure is creating assets or not, right? But we talk about eliminate revenue deficit. So also use the words effectively in your mains examination. When you talk about revenue deficit, you talk about eliminating the revenue deficit. It says that average fiscal deficit was reduced to less than 3% of GSDP. Then certain points are given how the deficit reduction to exogenous factors. One thing was acceleration in GDP growth, nominal GDP growth. Secondly, increased transfers from the center. Thirdly, reduce interest payments. This reduced interest payment by debt restructuring package offered by the central government, because central government gives debt to offer loans to the states. Now those loans, the debt was restructured in more favor to the states. And reduced need for the spending by the states. Why? Because more spending is coming from the CSS, was coming from CSS in the last years when it was. Now spending is somehow reducing even in the CSS as well, right? And that is easily understood, I believe, right? Why it is happening? Now you can see this CSS spending in 2011 it was very high, highest among. Now it is declining.
Hmm.
Do you see that? Why it is happening so?
42% state share.
Yes.
14%.
Right? So समझ में आ रहा है प्रिया क्या बात कर रहे हैं? Why it is so?
स्टेट का जो टैक्स का
Devolution होगा.
कि जब सेंटर के पास पैसा ही कम हो जाएगा then how the center will spend? So fiscal space get reduced because now center has to increase its yes devolution to states from 32% to 40% of the tax revenue that was to be shared, the revenue that was to be shared. Okay. Now discuss summary of the fiscal response FRL key. What FRL has actually achieved. In fiscal targets, 3% has been achieved. Secondly, 12th Finance Commission allowed states to borrow directly from market. So again, it helped in that way. So basic of FRL was to bring the fiscal discipline with the states. The new reporting requirement, a major broad discipline came. 14th Finance Commission, it recommended the fiscal deficit limits were to be relaxed by 0.5 percent points for states which met three conditions. These three conditions. So means fiscal deficit target was relaxed somehow by the 14th Finance Commission. The states which are performing good on the certain fiscal parameters. These are certain you can say understanding about fiscal responsibility legislation. Then you can leave this methodology. Come next to next page. Now 6.11 it discusses about incentive for states to adopt fiscal rules and to enable them to achieve these fiscal targets was central government provided debt DCRF, debt consolidation and restructuring facility. So the debt was restructured by the central government, providing more easy or restructured loans more favorable to the states. Impact on deficit, definitely the deficit reduced and revenue deficit got eliminated. Keep on coming next to next. So these are certain targets that were achieved: primary deficit, fiscal deficit. Come directly to assessment. Page number 121. Come to 121. So regarding FRL, it says it brought certain difference in terms of both outcome and behavior. Outcome we have seen regarding fiscal deficit that have been reduced to 2.4% of GDP. Behavior in terms of budget forecasting procedures, they have improved, and there was a more cautious approach to guarantee and build up of cash balance and reduction in debt. So one thing was how on the economic term the states they have proceeded. Secondly, how the states they have behaved in terms of their future forecast procedures, overall efficiency. What is Article 293.3 of the Constitution? It says state must take consent of center for additional borrowing. Come directly to next page. Lessons for future fiscal rules. Certain fiscal challenges. So you should remember all the fiscal challenges. What are the fiscal challenges? What are given there? Pay commission recommendation, slowing growth. Well, mounting payments from Uday bonds. What other fiscal challenges could be? Yes. What could be other fiscal challenges that are given apart from these? Finance Commission recommendation also a challenge because it has reduced fiscal space for the central government. But for states, it's a positive thing, right? For the states, the Finance Commission, what is 14th Finance Commission, it had given incentive. They did shift towards incentive by relaxing certain FRL norms. But on other side, there was the horizontal distribution among states based on the revenue from center to states. That was having fiscal deficit as one of the parameters. Now that provision has been scrapped off. So somehow the incentive from one level to other level that has shifted only. Some benefit has been given, some benefit has been taken back by the Finance Commission. I believe you understand the horizontal distribution. What is this? Among the states. So what else is required? Greater market-based discipline on state government finance is imperative. How and where it is missing here, how it is missing, because lack of correlation between spread on state government bonds and the debt or deficit position. Now market discipline has to be there, because now the state government, they can also borrow directly from the market as central government relax their norms. So there should be more market discipline on this. Then it is discussed here on the next page. With the markets reward prudent states, one would expect a positive relationship between the coupon rate and debt. So you understand coupon rate, I believe. What is this?
Interest rate on bonds.
Right. Directly, basically they don't give the interest rate. Means now.
They issue coupon.
क्या होता है? Suppose the government says कि we issue bond, right? You give us now say rupees 1 crore.
That would be converted into form of coupon.
No. Suppose 1 crore bond it is. They say okay. You give us rupees 90 lakh now. After 2 years, we'll give you 1 crore. So they don't bring the interest rate directly, but it is derived through coupon like this. Interest rate बताया नहीं कितना मिलेगा, 10% मिलेगा, 20% मिलेगा. They say like this कि suppose this bond is of rupees 1 crore after 2 years, then for this 1 crore you get after 2 years, you give us now 90 lakh rupees. So this is how the coupon is, the interest on the coupon is derived. So understand this from further discussion there. What they say? Now highly indebted states would have to offer a higher yield to make their bonds attractive. ठीक है? अब वो कहेंगे 90 लाख आप दोगे तो हम आपको 1 करोड़ की बजाय 1 करोड़ 20 लाख देंगे. Another proposal in 6.36, incentivizing good performance by states will require the center to be an exemplar of sound fiscal management itself. It means center has to lead by example. Center need to show in its fiscal path that it is following the fiscal consolidation with the political will, right? And that could be followed by the states as well. Now read these last few lines only. That saga of the state prudence has been overstated, but the underlying symmetry has some intrinsic truth. That is why the path of fiscal prudence embarked upon by this government is critical in itself, but also a model for the states. So what do you learn from this chapter? Not again much. Okay. Basically introduction, conclusion, and what do you understand from that, from our exam point of view? That regarding fiscal prudence, what the states are following, FRL has been contributed to that, but there are certain other exogenous factors as well that we had discussed. The factors like we had discussed the central transfer, FFC as well, various other CSS also. Then what what you can say, the proposals, the fiscal framework proposals. One thing was more market discipline, right? So better market discipline can come if the states they are performing well on those fronts, on the bonds and all. Secondly, center should lead by example by following the path of fiscal prudence. So these are only a few lines or a few understanding you can get. So introduction, conclusion again. That's it.
So are these tables relevant?
Hmm? No. That's all for today's discussion.
Okay, so that's all for today's class. If you like this video, you hit like and subscribe to our channel as well.